Welcome to my video on the COVID property market. This time we're going to be looking at opportunities. So as ever, when the market reacts to news, they tend to overshoot and there'll always be a handful of forced sellers. I mean, after all, repossessions are the backbone of the auction market. Make of that what you will. So if we do see a fall in property prices, we'll obviously see a corresponding rise in rental yields, and that could present itself an ideal time to add to your portfolio. So the 27% of landlords looking to exit the market might actually help with rental yields, especially if there's panic selling. As when they exit the market and as the supply of rental properties recedes without a corresponding fall in demand, we could expect to see rents rise as a result. So this actually could be positive news for us. So Savills, their research team, they were expecting a 5 to 10% fall in property values, but they're also expecting a relatively quick bounce back. Savills was predicting a 15% rise in property prices over the next 5 years. That prediction's not actually changed. If we look at this slide, they're still expecting a 15% rise in property values, but it's just the shape of the curve's a little bit different. 2022 is now going to be a sunny year, as they seem to be describing it. Sort of big bounce back then. This year's not going to be good. Next year's not going to be brilliant, but then we're going to see a big bounce as all the pent-up demand comes back into the market. If we do see price falls, this could be really great opportunities to buy. And with those 15% returns, which they're forecasting all round under whatever scenario, the 5-year outlook is pretty much unchanged. With typical gearing of like 75%, that's a 60% return for your buy-to-let investor, not including the rental side of things. So that is pretty positive to me. Even though we've seen the property market open up in the last week, the market is still stalled. Buyers still don't really want to view properties, and sellers don't want strangers in their homes. Coupled with doubts over employment, the economy, and the availability of mortgages, it's going to keep the market subdued for the near term. So the only people out there again are your people that have to transact. If you're, it's typical auction fodder. Those with mortgage difficulties, repossessions, etc., etc. So it is a great opportunity, I think. So while the lack of transactions, the downward pressure on prices, all sounds like it should be in the threat section, it underlines the opportunities out there. The long-term prospect is good. We're long-term professional investors. We don't care about the short-term so much. That's your opportunity to buy. In my pensions, we've had the fund managers come on and say, look, the value of your pension has been slashed because of what's happened in the financial markets, but we're having a great time because we're picking up really cheap stuff we've been looking at for a long time and simply thought, well, it's too expensive, and now they're picking it up. In the same way you can do that in the property market. Look for those bargains. Research what's good value, what will be good value in 5 years. And if you're brave enough and you've researched enough and you're able to access funds, whether that's cash or through a mortgage, that despite the uncertainty out there, there's definitely well-picked bargains to be had. So as you can maybe see from that, I'm fairly optimistic. I've carefully researched and bought properties, present a possibly once-in-a-career opportunity to invest in some great valued properties. Well, I hope that's useful. See you on the next one. Bye-bye.
Please don't forget to like, subscribe and comment. Thanks. See you on the next one.